Hello everyone, hope you're doing well. Welcome to a quick Monday Markets video brought to you by the FTX app, the best mobile trading app for all things crypto, not least because it has a nice hide portfolio button which may or may not be useful in the coming days, weeks, months, years. Obviously I'm kidding, but it is the best mobile trading app on the market, so go support them because they support us. So, we've got some stuff to talk about. The market's moving down. What does it all mean? Whatever, let's just have a nice orderly chat. I know crypto's fun at the moment, and Twitter is very fun, especially getting lit up with all the commentary about the UST peg and markets nuking in general, but we can take a reasoned view of all this, which is what we're going to try to do. So yeah, let's chat. Monthly time frame still focused around this 35 to 37k level. Quite simply, 3 weeks just over left on the monthly close. You want one of two things if you're a bull, either for the monthly close to recover and close above support, and this would be the wick portion of the candle, and that would be really positive, or even if the close takes place beyond this structure we're in right now, for the market to not travel too far and eventually find its way back into the range and reclaim 35 to 37k. That's how you build an optimistic view of BTC USD, and both of those still keep alive the idea that the market's just ranging between 30 and 60k before eventually moving higher, right? One thing to note about the second scenario, i.e. it does close below, but that ultimately is somehow bullish. It's not pure copium, right? And obviously if it closes below, you have to treat that as a break of support until proven otherwise. But the reason I bring that up as a potential possibility is that because we had a very similar price action at the range high, right? Which is to say, a move that closed through the boundary should have been trending, looks like a breakout, but ultimately didn't lead anywhere, no acceptance, and traded all the way back down to the other side once it was clear that the break attempt wasn't going anywhere, despite a close in that direction. So if we get something similar, like a mirror setup, what it would look like, again, is a close below the structure. The market doesn't really continue, doesn't really go anywhere, and ultimately, eventually, closes back within the range and takes you to the other extreme. So that's just something worth bearing in mind. And what those two scenarios have in common, of course, is that they, to some extent, have 35 to 37k acting as support, be that immediately this month or maybe in 1 or 2 months with the market not continuing to move lower. In any case, I still think it's worth keeping these levels on your charts to inform higher time frame decision making. Obviously, that I said if you're a bull. As far as shitty / pessimistic scenarios, it would simply be a monthly close below where we are right now. So below this 35, 37k structure. And then obviously acceleration to the downside. And what that would look like is pretty rough because then you have a failed breakout into a real breakdown that accelerates. And it would also be the start of a monthly kind of range expansion, right? With the market moving within 30 and 60k for, a year. And then this marking the beginning of a choice in direction. That would be a choice down, and your targets would have to reflect that. As far as targets go, if this keeps nuking, obviously there's plenty of content to make before then with the Tuesday newsletter, Wednesday duck stream, and so on. But if this just keeps teleporting, I think summer lows as a first kind of target, some sort of poke, spike, puke through there. And then if things get really bad, the 200-week... Where are you, boy? Why isn't that working? Am I an idiot? There we go. The 200-week moving average is often used as a higher time frame kind of trend following system. That lands around 20k, and even then it's unlikely that it acts perfectly. Like if you look at what happened during the COVID crash, even though that looks like an obvious bottom in hindsight, the difference between the moving average and how low price actually went, there's an extra 30% there, which is quite astonishing, right? So if we take like an extra 20-30% discount on top of the higher time frame trend moving average, you roughly get, 15k or thereabouts, and you end up basically rebuying previous cycles highs / breakout points, which is fine. But still, just to add some color in terms of if there's no reclaim, if this just keeps going down, again, every crypto video has to now be made with the proviso that if equities keep nuking, we're probably going to keep nuking with them, credit cycle tightening, yada yada, all that shit. If stuff keeps going down, short term, summer lows, real turbo nuke type of target, anywhere from 15 to 20k where we're doing business at previous cycle numbers. Okay, just something to bear in mind. Cool, that's pretty much it for the monthly time frame. The TLDR version ends up being kind of either wait for the monthly close or wait for the monthly to prove to you that it's back within the range. If it just breaks down and keeps nuking or breaks down and doesn't do shit, then you have to treat it as a breakdown and act accordingly. Which for me at least doesn't mean short, it just means wait. But if your circumstances are different, that's completely understandable. So on the weekly time frame, very, very similar image as you'd expect, right? Price reaching kind of the apex or the bottom of the range, and looks like it needs some rescuing. Bear in mind, we do have like a record-setting consecutive number of down candles, which isn't the type of record that I like to set. But at the very least, like same range trading rules apply, right? Like when you're getting price nuking through levels, the only time those types of nukes become buyable is either when you get them for very cheap and the prices become discounted or broken, or if that breakdown fails and shows you some evidence of absorption or whatever. So in this case, right, for example, if this is our support level, the market comes down into it and you get a red close through it. As you'll know from the clean double close videos on the TA channel, one of the setups that suggests a failed breakdown or short-term reversal is if price closes through a level and then the next week closes back above it, right? Let's say something like this, for example. And then you'd expect continuation, reversal, given that the breakdown failed. So on the weekly time frame, maybe something like that would be cool. You know, if this and there's again 6 days left here, so plenty of time to alter the optics, if you will. But in any case, if you're looking for failed breakdown type of setups, a really basic example to bear in mind is, let's say, red close this week, green close next week, and crucially, it's not just like the consecutive candle color that makes all the difference, but really the difference maker is at least the setup will tell you where you're wrong, right? Which is to say, whenever you get a failed breakdown type of setup, it has a built-in invalidation. So in this case, the invalidation is this as the excess low, and you're expecting higher prices. And on the weekly time frame, if you get a close below and next week closes above, or 1 or 2 weeks later it closes above, at least you know where you're wrong on the setup, i.e. the point where all the excess selling took place, or where what should be the deviation, the failed breakdown, where participants tried to force a breakdown and weren't successful. Those types of structures generally shouldn't be violated, and the bounce area for that would just be anywhere in the previous support at 36 to 38k. That's another thing to bear in mind. Like, we've had 5, 6, 10 red weeks in a row, whatever it is at the moment. I mean, we can count it. I think it's 6, right? 1, 2, 3, 4. Wait, 1, 2, 3, 4, 5, 6, and this looks like the 7th one. Which would be rough, and again, a whole 6 days left to rescue it. But in any case, that's a pretty one-sided move. If you get a rip up from such a one-sided move, those rips tend not to be trend reversing, but just simply mean reverting. So if you're going to be playing this bounce, I think you should still be conservative and not fall in love with it. And there's a decent target somewhere in this kind of 38, 40k area. This move is worth catching from a trader's point of view, but it's probably not trend reversing from a higher time frame trading point of view either. That's a lot of rambling to basically say the market is in an area of weekly support, but in case you didn't notice, all the levels have been getting run over and completely broken. So for me at least, unless I know I'm getting it from someone's puke into the market, or very cheap, or just something becoming very broken or discounted, I don't want to step in front of it until it shows me that for once the breakdown wasn't successful and there's actually some soak going on and some sort of setup to be had in the other direction, right? I need evidence of a failed breakdown, because so far we've just got weeks of consecutive evidence of successful breakdowns, okay? And that applies in the monthly as much as it does in the weekly. It's really the 3-day and the daily that show the most recent shift in conditions the clearest. Yeah, same eye test consideration applies, that the market's like at around the bottom of the range, like very cool. However, if you're going to be looking for the reclaimy type of setups, if you look at the last 100 days of price action, which is essentially this consolidation, right? All of this here. Actually, we could do a slightly better job than that. We could have, this is our range low, right? Lowest close. This is our range high, highest close. And look at the market through that type of lens. We had a failed breakout to the upside, and then it looks like we have a breakdown to the downside at the moment. If I were to draw this on any other time frame or invert it or do whatever else, as far as what would make this bullish, most of you would quite reasonably argue that, well, this looks like a breakdown. If the breakdown fails and it trades back within the range, there it becomes attractive, and your risk is defined by either the recent low or the lowest low. And I would agree with you. We just don't have that at the moment. Instead, we have what looked like balance for 100 days, and then the market breaks down. Could that be bullish? Sure, right? Maybe this is the puke into 30k, into the weekly support, and it just gets completely mooned, and everyone who's sold here feels really bad. That's completely plausible. However, that setup only becomes actionable for me if it proves that, or gives you more evidence by actually trading back within the range and not accepting the prices we're at the moment. So it's kind of worth waiting for whatever percentage move it is from where the market is right now to where you kind of have much better evidence that it's bullish, right? So that's kind of what's on my radar. But taking things at face value for the time being is that we had balance for 100 days and it's a break from balance. That's typically bearish until it isn't. What does until it isn't mean? Prove it by failing to break down. That's really all I've got for BTC. Reaching kind of very low levels in terms of market structure and where we are relative to the range. If you want to go fishing, for me at least, being completely transparent, I'm not blindly buying these levels. I want to see some absorption and or some sort of puke, some sort of outsized wick, some sort of slowdown in the selling. Just give me something actionable, because it's definitely been a bit grindy and one-sided for the time being. In the absence of that type of outlier move, I will be that guy waiting for some sort of reclaim or strength to be getting long. The third option, as I said, if things get really pukey, kind of 20k pukey, I'll step in to do business. But around the 30k handle, I either need it cheap or I need it strong. Anything in the middle or between those two, I'm slightly less enticed by. And the market thus far has rewarded my patience, so I'm not going to push it, so to speak. Nothing interesting to say for ETH. Same considerations apply. Like in an area of monthly support, if you want to see some absorption or soak or failed breakdown, that's totally legit. ETH also hasn't really tested its range low as well as BTC. Just for me, that's a bit closer to 2k than most participants have it mapped out. So if it gets really pukey towards 2k round number, maybe slightly below 2k, that's probably attractive for some sort of short-term trade. But overall, like this type of structure consolidation that we're in is not my favorite at all. And I've been staying out of ETH, mostly using BTC. The market's been kind to me in that regard, so I don't see any reason to change that for the time being. Really, 2k is on my radar. Intraday, the recent low I hate as a higher low, but as a range trade, maybe there's something to be said for a reclaim of 2.5k. But again, honestly, I'm going to delete this, and it's either the range low at 2k that I like, or the reclaim back above this kind of 3k area that is attractive, right? We had a nasty failed breakout at this level. If it gets back up there, the likelihood of trading towards 4k plus, in my view, is very high. So I quite like a momentum continuation through 3k or thereabouts, or a puke into the range low. Any of this type of midpoint stuff is honestly not super fun for me. Not much else to say on altcoins. Maybe we'll do a separate video on the whole UST peg type of structure. The TLDR, I mean, Luna's getting completely admonished. That said, right, it's kind of reached the target technically for this move. We were not mega fudding, but look, this kind of failed breakdown pattern is one we were obviously not particularly fond of, given how ugly it tends to look. But that's kind of reached the apex of its TA move now, right? So if you kind of look at the market purely from a technical lens, and you're not considering what the implications of a weak UST peg could have on the price of Luna, and you don't have any kind of mechanistic thesis for what that might mean for the token price itself, purely structurally, if you're going to get any sort of oversold bounces on Luna, even if they're kind of technical ones, this is kind of the area where you'd expect that to take place. Obviously, absolutely hideous move. You'd be hard pressed to make an argument for longing one of the weakest altcoins over the past week or so, but just purely from a trading point of view, I wouldn't be opening fresh shorts here unless you have a very compelling thesis on the UST side of things, simply because it's back at weekly structure, which is boring. Obviously, if UST collapses and the whole Luna thing blows up, this won't do anything and you expect much lower prices. But as far as kind of eye test type of thing goes, there are probably clearer trades in the market than short Luna into the low or into the range low. Again, absent a compelling UST thesis. That's really all I've got. As I said before, equities still look rough, and as long as that continues to be the case, that's a kind of headwind that fading with crypto is probably not the best idea. And just in general, the likelihood of your setups getting hammered if equities continue to look like this is pretty high. Like every video starts with the same thing, like yes, TA support and this, that, and the other on BTC or ETH, but if this continues to look like this, it won't matter. So unfortunate proviso, still have to include. Hopefully that was some useful commentary for BTC and ETH. Not much in altcoin land that I find super compelling. Very similar structures in many cases of the market, pretty much just breaking through ranges. And if they reclaim those ranges, fantastic. If they don't, then you have to take the breakdown at face value and either scoop it for very cheap or wait. That's all I've got. Hopefully this is helpful. Leave a like on the video if it was. newsletter tomorrow, tlletter.com, all that good stuff. Thank you for watching and for your support on the channel thus far. If you want to see more stuff, maybe a video specifically on UST, which was kind of beyond the scope of this hopefully short one, let me know in the comments, and have an excellent week. Take care, and bye-bye.